The OPEC plus cuts, extending them, obviously it seems was intended to kind of put a floor under prices. Do you think it's actually going to work?
Well, it's a very extensive deal, Frank. There was a lot announced here, and you covered the basic elements of it, which is basically keeping cuts in place until the end of December 2025. But in terms of how the market reacts, I mean, the market has been reacting funny to even geopolitical risk that we've been seeing here in the region. So any kind of reaction has been not necessarily to the fundamentals, but more relying on sentiment. And I think that there's still concern in the market here about the growth trajectory for this year. And we see that in the numbers. I mean, OPEC's very bullish forecast versus other agencies, which almost have half of that amount. So in terms of being bullish for prices, I don't think we're seeing that because that's not translating.
All right, you don't think it's translating. Helima, coming over to you, I just want to point out, oil is trading at its lowest price in about a month. We did see a spike after some Middle East tensions, but since then, they just kind of seem to continue to decline. Do you believe these cuts, extending them, is going to put some type of floor on prices?
Well, I mean, what I think is important is we have a roadmap now in terms of what OPEC production should look like. But as Amena pointed out, I mean, we've had basically all geopolitical risk come out of this market. Everyone has essentially faded the Middle East story. And now we have a market that is well supplied. We are not in deficit at the moment. We are going into summer driving season. So we have to see what type of draws we start to get. Now, some people read the OPEC statement yesterday, particularly the part about the adding barrels back from the voluntary cut as bearish, essentially saying that Saudi Arabia is taking a bite out of the lollipop of 1 million barrels that they voluntarily cut. The one thing I would say is that they were pretty clear that this is going to be data dependent. So as we get to the end of August, if the fundamental picture looks worse than what we have now, they would pause that addition. So they're not going to roll those barrels into the market if there is a marked deterioration in the fundamentals. So they're giving you a roadmap for bringing the barrels back, but they do have an exit ramp if the situation deteriorates.
All right, so you're saying it's a roadmap. I mean, I want to come back over to you. There was one thing that I think a lot of people, or at least I scratched my head about, the UAE receiving a revision to actually produce more barrels. What was that about?
Well, the UAE has been building its capacity, and let me just kind of rewind and explain why that happened. This doesn't mean that the UAE was favored by the organization. Back in June last year, the UAE was given a baseline of 3.4, and the officials here told the Saudis that they are okay having a revision of 3.2. So they were able to agree to a lower baseline to support the deal. As a sign of appreciation to the UAE and knowing that the UAE is building capacity, and if you look at the UAE's cuts in terms of percentage, it doesn't match the other countries. They needed to keep the UAE at par with all the other states by percentage terms. So giving that UAE that extra 300,000 barrels does make sense and make the process a fair one. So they were not favored here.
All right, so Helima, you called this one a plot twist. What is this? Or does it at all impact just the idea of the roadmap that you were laying out? Amena gave us the explanation right there.
Well, I think that the twist was that we didn't get simply a rollover everything through year end. I mean, we had the extension of the collective cut through December 2025, but now we have this roadmap on what they're going to do with the voluntaries. I mean, there were market participants essentially saying, show me how these barrels are going to come back. Are they going to be indefinitely off the market? And so now we have the path for essentially these voluntary cut producers slow rolling them into the market. Now, again, some market analysts were very focused on any additional supply, essentially saying this is bearish. I would just, again, caution that it is a slow roll into the market, and they can basically pull back if there is a change in the actual outlook.
All right, Helima, I'm going to stick with you. Timing of these cuts, it extends to through Q3, leads us right up to the U.S. election. Yes. Is that just coincidence, or is there, you're laughing right now, is that just coincidence, or is there something else to it? It seems like there's something else to it, just by your reaction.
No, I mean, I think that's the question everyone is asking right now. Like, is this somehow related to the election? The fact that essentially they're going to be putting barrels on potentially as we go right into the U.S. election. What I think, though, if I were sitting in Washington, I would be very happy with this result. I mean, simply having a roadmap for barrels coming back, I think, is something that the Biden administration should be happy with. And right now, we still have talks ongoing about this U.S.-Saudi grand bargain. And so having the Saudis signal a willingness to bring back some barrels, I think that buys them goodwill, in Washington.